is Ticky. Now on Your Money.
Hello there, I'm Leanne Jones filling in for Ticky Fullerton every night, bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, John Stanhope on the importance of integration and digitisation in business. Ticky Fullerton's interview with the Australia Post chairman in just a moment. Wrapping up the US midterms elections with the firing of US Attorney General Jeff Sessions. We'll get the latest with the Australia's Washington DC correspondent Cam Stewart. And the APA Group's CKI deal rejected by the government. We'll get some analysis from Q1 Capital's Managing Director Brock Silvers. But first, BHP says it's seeing sustained demand for commodities as the mining company holds its AGM in Adelaide. And in the wake of the runaway train in the Pilbara, BHP also telling shareholders the global shift towards a lower carbon future and rising trade tensions will not derail the corporation.
The largest consumer of commodities globally, China, has endeavored to maintain growth by addressing financial sector and credit market risks. And the Chinese government is likely to remain focused on protecting against geopolitical and economic volatility to enable it to continue on its growth path. Now, over the longer term, we remain optimistic that a healthy global trade environment will be supported by agreements that are both inclusive and fair, as protectionist policies will only result in lower productivity and less affordable goods and services across nations.
The company is proceeding with caution in the near-term future, but is positive about the future, with plans to appoint a new non-executive director with mining experience early next year. It's expected that all resettlements related to the San Marco dam failure will be dusted off by 2020. Well, for more, let's bring in the Australian senior resources writer, Matt Chambers. Matt, thanks so much for joining us.
Hi there, thanks.
Now, you covered the annual general meeting today. What was the mood like among both management and shareholders?
I think it was pretty upbeat. It was a fairly low-key meeting by BHP standards. There weren't much in the way of protests, like there often are. Yeah. I think people were happy that they just had a $10.4 billion US dividend and buyback thrown their way. So it was fairly positive, I think.
Well, something they're not going to be happy with is this kind of ghost train disaster that took place, obviously, in the Pilbara. Was there much discussion on that? And what are the early costs? I mean, people are saying up to $50 million, but that's just the crash itself, right? I mean, what's going to really hurt them is the supply chain issue as a result.
Yeah, we learned a little bit more about the crash and what happened when it did. The CEO said it was a system problem. I mean, which sounds like it wasn't just a driver got out and forgot to put the handbrake on. And then the train, they realised they had an out-of-control train. It was hurtling along the track. They hoped it would slow down, but it didn't. But when it came close to either hitting bridges or trains in front, they purposely derailed it, and that's what we had. Yeah. And I guess, as you said, people are talking up to $50 million of costs. They think it'll take under a week to basically clear the train off the tracks and redo the tracks, and they'll be back on. But when you've got a business as big as BHP's iron ore unit, that's a lot of money.
Yeah, and what of other shareholders? Of course, Elliott has been causing BHP a bit of heartburn for a while. Do you think they've been placated by these decisions, particularly in regard to US shale?
Yeah, I think so. I think Elliott had a good run. They've, to some extent, been a catalyst for the sale or the quick sale of the US shale assets. They're still pushing the unification of the London and Australian shares, but I think there's not a lot of momentum around that one at the moment. I think BHP say, look, we've really looked at it, we'd like to do it, it's just not cost effective at the moment, and I think most shareholders believe them on that one.
Yeah, now, okay, moving to APA. The bid about this time last night, news from the Treasurer, Josh Frydenberg, that basically the FIRB, well, under his direction, had decided to block the bid. Your initial reaction to that? Personally, I wasn't very surprised, although the market did seem to be surprised, losing a lot of value that it wasn't already priced in.
Yeah, shares were off 10% today. They're back down pretty much to where they were before we learned that CKR was making this $11 a share bid, which is about $8.50 they're at. No, I think many people were starting to feel, and indeed APA Chief Mick McCormack has said it's going to be very hard for the government to approve this in the current political climate. You've got an election coming up, now minority government, and it was always going to put a huge target on the government if they approved it. But yeah, it was kind of strange that shares sort of were held up. There were a lot of people expecting that it would go through.
Yeah. Well, where does CK go from here? Are they going to go on the hunt for other assets in Australia and pull out for a while strategically to, hope that the political environment settles down, especially in regard to Chinese acquisitions? That
seems to be the main question, especially around APA. APA and CK both seem to be in a bit of a stunned silence at the moment. They had no... This wasn't foreshadowed to them. This preliminary view that the Treasurer put out, they weren't expecting. So they've made no comment at all, either of them. There's talk that CK may try to bring in an Australian investor, put a consortium together. But then again, there's also the counter to that is that they paid they offered such a full price because of their low access to capital. It may be hard to get investors in at that price, and they also traditionally like to go it alone. So. Yeah, it's unclear what their next move's going to be. And yeah, it's also unclear whether they feel they're going to be able to access any more assets in Australia where they've been a big investor.
And what of APA? Do you think do you think anyone else will make a bid anytime soon?
Well, there are bidders waiting in the wings.
Who are they?
Well, IFM has been the main one, and they've in the past employed people to actually look at it. And APA did a sort of bit of a global search when they had the CK bid. They went out with, I think it was with JP Morgan, and just searched out all interest in all continents to get it. They couldn't get the same bid, or couldn't get anyone to match it. But presumably they know if there's bidders out there who would offer a price that they might take that's below that. Okay, Matt Chambers, Senior Resource Provider at The Australian. Thanks so much for joining us. Thanks, Leo.
Well, in breaking news, a statement has been released detailing an alleged incident between an ABC reporter and New South Wales opposition leader Luke Foley. Ashley Raper has confirmed she is the journalist at the centre of allegations that were raised under parliamentary privilege last month. For more, let's bring in Sky News reporter Charlotte Mortlock. Hi, Charlotte. Now, what is the latest?
Good evening. We've actually just had... Yeah, we've just had some breaking news in the past few minutes. Of course, we've actually heard from the media advisor of Luke Foley. They've announced that they will be holding a press conference at 5:30 today. Now, there were few clues in that media release. It said that he will simply be making a statement, but pressure is mounting. A lot of people thinking that he is most likely to step down from his position as opposition leader, and the most likely contenders to take his place are going to be Michael Daly and also Chris Minns. This obviously comes off the back of, as you were saying, Leo, allegations that have been put forward by ABC journalist Ashley Raper, who has accused the New South Wales opposition leader of touching her on the backside at a Christmas function in November 2016. So, of course, he has strenuously denied those claims from the start, but it does seem we are going to hear more on this topic within the next 20 minutes.
Yeah, well, surely the opposition leader's position is pretty untenable now, one would think, Charlotte, and this does change the dynamic of the upcoming New South Wales election next year.
Yeah, absolutely. I mean, we're just months away from having our state election, so this is going to be a very interesting time ahead, and certainly for Labor, this will be a tricky one for them to try and contain their party together in the next few months and to try and regain some stability if that is to happen. Either way, even if he doesn't step down, I think there is certainly a lot of speculation that this pressure for him to step aside will simply be too much. So whether he resigns today or he's pushed out at a later time, but certainly it's going to be an interesting 20 few minutes ahead with that press conference. All right, Charlotte Mortlock, Sky News reporter, thanks so much for joining us. And now to a window on the top floor. John Stanhope is a long-standing company director of AGL and currently chairs Australia Post. He had a long executive career too, including CFO at Telstra. So it was interesting to hear his views yesterday at the World Congress of Accountants in Sydney around how companies can do a much better job at delivering for all stakeholders. One way is through what's called integrated reporting, which takes into account much more than just profits and returns to shareholders. It makes you think about every stakeholder, including customers, and overall governance matters. The thinking is that understanding how you treat other stakeholders can also impact long-term shareholder value. And after all, John Stanhope says that's why directors should be there. Ticky Fullerton sat down with John Stanhope on the sidelines of the conference.
I'm suggesting, and I suggested today at this conference, that an integrated report is a way to actually restore trust in corporate Australia. for that matter, trust with corporates worldwide is at a low ebb. But let's just focus on Australia.
Why? What would it do? What could it do?
Well, what it can do is, I think companies need to do the right thing and not just do things right. Doing things right is complying with the law, regulations and so on, and you would hope we do that. And that lots of boards sit around and check compliance with the law, compliance with regulation. But are we doing the right thing by the customer? Just because clause 456A2 says we can charge a fee, right, is it actually the right thing by the customer to do so? So, to my point, if you report out in an integrated report how you've done the right thing by customers, and even more importantly, how over the last, say, 6 months or 12 months, depending on your reporting time frame, I guess, where we didn't and what we're doing about it. And I think it'll take some time, but if corporations did that, then it would be a long way on the path of restoring trust. You can call it transparency, but you know, it's one thing to say in a corporation, yeah, these things happened and they weren't good and they shouldn't have happened, and we're going to fix them. But what's a way to report that we have?
So I would have thought that the company that you currently chair now, Australia Post, would be just the sort of business with all its different stakeholders to apply this integrated reporting to.
Well, and we do. So let me give you an example in Australia Post. So we do an integrated report. But let's not just talk report, it's about integrated thinking as well. So you've got to think at the start of the process, if you like, in an integrated way. So before we get a strategy together, let's think about all stakeholders. And some companies do that, and you might, you know, I can recall days where, you know, you put the circle up and the stakeholders are around the circle as you're talking about strategy. But actually reporting against it, you know, externally, is a great discipline, right? To tell your many stakeholders what you're doing.
You, because of who you are at Aussie Post, I suppose one of the key stakeholders to look at are your employees because of the transition that you're going through.
So let me get to the example. So the example is that with letters declining and parcels growing, we could have thought in a non-integrated way about the business. And we could have made a lot of posties redundant, right? And because of the decline, and we could have kept employing contractors to deliver parcels. What we deliberately decided to do was, no, we're going to make the posties deliverers of parcels. And now, you know, in the mid 30%, they deliver parcels. By the way, it's a low-cost channel to deliver parcels, which obviously has an economic benefit.
And does that seem to be tracking well, that strategy?
And it is tracking well, but importantly, thinking about the stakeholder, our people, it keeps the food on the table of those families, of those employees.
Another development, of course, has been this backlash against the big end of town, and particularly the amount that CEOs, top management are paid. Now, this issue obviously came up at Australia Post with Ahmed Fahour, and now Christine Holgate is paid a lot less. But do you see this as a very live issue at the moment in boardrooms around Australia?
Oh, look, I think certainly in recent times, because community expectations have changed, there is a lot more discussion in boardrooms about executive salaries, and an input is the stakeholder community. And this is another example, right, of integrated thinking. And it is having an impact on future salaries. So Australia Post, it was not only Christine Holgate, but other executives of salaries are now at a lower level.
But business has been pushed into this, they have been pushed into it. Where is the lead coming from in terms of innovative structures in boardrooms now?
Well, by listening to listen. So where has it, when you say pushed into it, it's been pushed into it by a community, let's call it a backlash again, high salaries, employees not getting getting low increases and so on. And so the disparity and so on has become a topic, and social media helps and all those things. But at the end of the day, community expectations have to be listened to. I would also argue that people need to get paid their value as well. But the question is, has it gone over the top? And is there and people are adjusting, listening to their community expectation, but still paying value.
But would you be a proponent of a CEO's salary being a particular multiple of a median wage at the company, or do you think that's pretty difficult to apply?
I don't think so, because no one role at a senior level is the same. The CEO of Australia Post is much different from the CEO of the Port of Melbourne, a Vice-Chancellor, and I'm going through the organisations I'm part of. They are different jobs.
John, as someone who's operated in so many business sectors, what do you think of the current level of government intervention? I mean, I'm thinking of the bank levies, of the East Coast Gas, including the pressure on AGL to keep Liddell open. There's the electricity retail deferred reference price. There's Labor's idea of intervening on the private health insurance side, and there's foreign investment too.
Yeah, look, I think they too are responding to community expectations. So take the affordability of electricity. I mean, they are listening to what the community is saying. There's a fundamental that's happened here. One is that a fair bit of supply got taken out of the system, and the good old economic equation works that when demand doesn't change and you take supply out, price goes up. But what's happening is the market is actually working and supply is coming back.
Will the market work though if the government moves actually to put a cap on retail prices?
Well, I guess we would like not to have that intervention, but I can understand with community expectations built up, governments will tend to do that. I don't know what happened at the meeting today, but our position, at AGL we understand that electricity prices have gone up, we know they have, and that affordability is an issue. And so we want to get back to prices that are more affordable.
Well, is this part of perhaps the gentailers looking a little bit more at their profits? And I mean, certainly the Ausgrids of this world, they have said that they've done a lot of the heavy lifting in terms of cost cutting.
Well, to invest in supply costs money, and you do have to have cash flow from profitability to invest. And we've made a stance on coal, and we intend to close all coal by 2050, and so we have to reinvest in renewables. Right? The real question, of course, is when. So centralised generation will decline, decentralised generation will increase. The real question here is storage and what is being called firm dispatch.
Yes, which is what is being discussed today.
Yeah, and firm dispatch is about storage, because when you've got renewables, you need storage. Right? So, but all that conversation, reducing profitability ignores you need to invest in a new world of renewable energy and storage capability.
Finally, how are you going at AGL in your deliberations around a CEO, announcing a new CEO?
Early in the process.
Early in the process.
Yeah, and Brett's doing a good job as interim. So.
All right. John Stanhope, great to talk to you. Thank you so much.
No worries to you.
Well, after the break, the dust settles after the midterms and Trump fires Attorney General Jeff Sessions. We'll get the latest from Washington, D.C. with the Australian's correspondent, Cam Stewart.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. There are concerns Donald Trump is planning to soon stop the long-running Russian probe. The head of the Department of Justice, which is running the investigation, announced his resignation this morning. Jeff Sessions was reportedly pushed to quit by President Trump, who today lashed out at members of the media.
I tell you what, CNN should be ashamed of itself having you working for them. You are a rude, terrible person. You shouldn't be working for CNN.
It was a war of words at the White House between President Trump and journalists after a turbulent midterm election. The president blaming Republican losses last night on candidates trying to distance themselves from his agenda.
On the other hand, you had some that decided to, let's stay away, let's stay away. They did very poorly.
Discussing his next move going into a Congress with a Democrat-controlled House.
There are many things we can get along on without a lot of trouble, that we agree very much with them and they agree with us. I would like to see bipartisanship.
And sparring with the press.
It's a racist question. What you said is so insulting to me.
Then a surprising announcement from the Department of Justice, a resignation letter from Attorney General Jeff Sessions, a change hinted at by the president this morning.
I mean, there's no great secret. A lot of administrations make changes after midterms.
And already concerning those across the aisle about the future of the Russia investigation.
Protecting Mueller and his investigation is paramount.
And for more on what panned out post-midterm elections, I spoke with the Australian's Washington correspondent Cam Stewart a little earlier. Cam Stewart, thanks so much for joining us. Now, I'm going to start asking you about this action by the president this morning in sacking his Attorney General, Jeff Sessions. There's been some speculation he'd be wanting to do this for a while. Does the timing of it surprise you?
The timing of it definitely surprises me, Leo. I mean, this is played out like a political thriller here in Washington today. It was really like a political thriller. Basically, Trump gave a 90-minute press conference in which he was asked about Jeff Sessions and he brushed the question aside. What we didn't know at that point was that John Kelly, the Chief of Staff, had already asked Jeff Sessions to resign, and Jeff Sessions had resigned. So we knew that Jeff Sessions was going to be removed at some point after the midterm elections because he and Trump have had a very fractious relationship for over a year now. Trump was very, very upset that Jeff Sessions recused himself from the Russian investigation. He thought that was unnecessary, and he thought it indirectly led to the appointment of Robert Mueller as the special counsel. But we certainly didn't expect that he would actually be sacked the very day after the midterm election. So it caught a lot of people in Washington by surprise, including many in the White House.
Yes, no time to take a breath over there. Now, there was a lot of talk prior to the election that this would be a blue wave of sorts. That hasn't really eventuated. All things considered, it's actually not a bad result for President Trump and the Republicans. Would you agree?
Look, that's right. I think there's more upside for Donald Trump than downside in this result. You know, it is a mixed result to some degree. I mean, the Democrats have taken the House of Representatives, and so, you know, that is a win for them, and it's something that's quite important for them in the next 2 years, and that will stymie Trump's presidency to some degree. But the actual size of the win, about 28 seats at this point in time, is really relatively modest and very much in keeping with historical trends, which have about a 30-seat loss for the party of the sitting president in midterm elections ever since World War II. Apart from that, the Republicans actually increased their majority in the Senate, you know. So, I mean, all up, it wasn't a bad result for Donald Trump, and he certainly, he said it was a near-perfect result, which is probably a bit of an exaggeration, but it definitely is a good result for him.
Yes, hyperbole, ever President Trump's strong point. What is there for the Democrats in this result? Obviously, they've done well in taking the House, also done well in a lot of the gubernatorial races. So what can they hold on to pushing towards the 2020 presidential election?
Well, look, the win for the Democrats means that they can do two things. They can really stymie the aspects of Donald Trump's agenda that they don't like. For example, they can stymie funding for the border wall. They can prevent any attempt, a second attempt by the Republicans to repeal Obamacare. They can try and get infrastructure reform through on their own terms if possible. So that's one big benefit for the Democrats. The second one, of course, is to cause a lot of trouble for the president by they can now initiate a raft of inquiries in the House because they've got the lead on the committees. And they can look into aspects of Donald Trump's finances, his taxation returns, they can extend the Russian investigation. So there's lots of things they can do. And of course, ultimately, if they wanted to, they could actually start impeachment proceedings, although that would go nowhere because the Republicans in the Senate would kill it dead when it got to the Senate.
Yes, on that point, what do you think the likelihood is of the Democrats pushing on with impeachment proceedings, despite the fact they have no chance of succeeding in it?
Look, it's an interesting question. At this point in time, the mood in the Democrats appears to be that they could be shooting themselves in the foot by doing that. The Republicans shot themselves in the foot to a degree by doing that with Bill Clinton, because it became to be seen that they were just bullying and harassing, and it actually sparked a bad reaction from the electorate. So the Democrats might be wary of doing that, because if they went down the impeachment route in the House, A, it wouldn't get traction in the Senate, but B, it would really fire up Donald Trump's base. And that's probably what they don't want to do. So it'll be interesting to see. I think it might depend a little bit on the sort of report that Robert Mueller brings down. If Mueller brings down a report that really suggests that Trump is guilty of obstruction of justice, etc., that might push the Democrats across the line in deciding to initiate impeachment proceedings.
Where to now for President Trump's agenda? Firstly, domestically, the tax cuts have had a desired effect. I suppose the economy is travelling quite well, although there is that sugar hit element to it. Some are worried that's going to run out, and also inflationary pressures in the US. Where to now for his domestic and economic agenda?
Well, certainly he wants to fix up immigration. He's very frustrated with the laws. We heard a lot of noise about that in the last couple of weeks especially. He really wants to get deals going on immigration which have tougher border security. He wants to get that war going if he possibly can, but he won't get finance for it now. He wants to work out the DACA, the sons of immigrants. He wants to get their status fixed up. So that's one big aspect. He certainly wants to get infrastructure reform through. That's something that he has been talking about. In the 2016 election, he never got a chance to do that. He's talking about a 10% tax cut as well in very vague terms. So there's quite a few things there he'd want to do, but because of the gridlock, or the expected gridlock in Congress after the Democrats actually take power there, I think you'll find that a lot of Donald Trump's agenda is done by executive order, which is how Clinton and Obama had to do it when they actually lost control of Congress.
And what about, from an economic standpoint? Financial markets are pretty happy with the result. What have you heard in terms of what this means for the US economy in the next couple of years?
Well, certainly the markets seem to have been received the result from the election quite well. Like Donald Trump, the economy is humming along. Of course, he's very lucky to inherit the economic cycle that he did when he came to power, very much like Bill Clinton did in the early 90s. But Trump has added to it by obviously with tax cuts and with his pro-business rhetoric, getting rid of various regulations that he felt were holding back business. His promises to bring back coal and steel, etc., which have made only limited progress, but certainly there has been small progress. And so, out in Trump land, in his heartland, voters very much credit him for the state of the economy. Even though a president doesn't have, obviously, complete power over an economy, they certainly give him credit for that. And you've got to think that that played a little bit into the relatively mild losses in the House and the expansion of power in the Senate.
And where to on the major international, I suppose, trade issue, the trade war that's developing between China and the US? Do you see any kind of détente developing there? There has been more conciliatory language in the last couple of days from both sides, certainly.
Yeah, look, there has been. The Americans were not interested in dealing with China for about the last 2 months because they felt that China wasn't ready to come to any sort of agreement on a deal to diffuse the tariff war. And so Donald Trump was playing hardball with China. He's certainly been very strong with his rhetoric in the last 2 months, much stronger than before. But we have seen signs of a tentative thaw in the last couple of days. I think the big moment will be later this month when the Chinese President Xi Jinping meets with Donald Trump at the G20 meeting in Argentina. That's the time when the two leaders are face to face. I think if we're going to get a bit of a breakthrough, we might see the start of that proceedings at that meeting.
And finally, Cam, in terms of international trade, defence issues, Can we expect more pressure being applied to Iran in the next couple of years? Is the focus in defence and foreign policy going to move very much towards Iran and getting a result there?
Look, yes, Iran is really one of the big ticket items for this administration. I mean, they have consistently been much more aggressive towards Iran, calling Iran out for its terrorism sponsorship, and of course, famously pulling out of the Iran nuclear deal. You know, a deal which Australia, you know, still supports. So they have been very strong on this, and they will continue to be very, very strong on Iran. And the other thing, they'll be stronger on China as well. So militarily, you're going to see Iran, China and Russia being the focus of American strategic thought and diplomatic action.
All right, Cam Stewart joining us from Washington. Thank you so much.
Pleasure.
Busy man, Cam Stewart there. After the break, APA CKI deal rejected by Treasurer Josh Frydenberg. We'll get some analysis from Managing Director of Q1 Capital, Brock Silvers, next.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, as we discussed earlier in company news, Treasurer Josh Frydenberg has rejected CK infrastructure bids for APA Group. The Treasurer said the deal with the Hong Kong-based company would be contrary to the national interest. How will this play out in China? Well, let's bring in Brock Silvers, Managing Partner of Q1 Capital, who joins me from Shanghai. Brock, thank you for joining us.
Glad to be here.
Now, initially, your thoughts on this deal. From a domestic standpoint, the rejection by the FIRB wasn't that much of a surprise to many because of the focus the Australian government's had on Chinese companies investing in Australia in infrastructure. What, if any, has there been reaction from China?
Well, there hasn't been a lot about the deal in the press, but I can't believe that many watchers really thought that this deal was going to go through or that it had a serious chance. Look, you can't realistically expect the Chinese state grid to acquire what is fundamentally the Australian state grid. That's just not going to fly from many perspectives. So now the deal has been rejected. I just can't see where, other than perhaps in the Chung Kong Center in Hong Kong, that people would really be surprised by this.
Yeah. Now, does this leave, as I mentioned, there's been a lot of focus by the Australian government, particularly in regards to Chinese companies, and then particularly in regard to national security interests around Australian assets and infrastructure. How carefully do you think the Chinese government are watching this decision, and do you think they're going to be a bit peeved?
Well, I think they will be a bit peeved, but I think the reason we're seeing these types of deals is because they've already gone down this road with the U.S. And as the U.S. has tightened review of deals with sort of a renewed and strengthened CFIUS, we're seeing the same thing in other countries, now in Australia, but in Japan and some other places as well. And globally, we can see that sort of the screws are being tightened a bit on Chinese acquisitiveness. And not necessarily from the private sector, but certainly when you see state actors acquiring other important infrastructure assets, that would raise a lot of red flags.
Yeah, and on that point, President Xi, of course, addressed the Shanghai Expo this week, a trade expo, and made specific point that he would aim to protect foreign companies' interests who are looking to invest in China. Do you think this was an attempt to allay the fears, the national security fears around Chinese investment in countries like Australia?
Well, I'm not sure that China has really come to grips with the rising suspicion of overseas Chinese acquisitions due to security issues. I think they were somewhat surprised by this, and they're just now sort of starting to deal with it in a more systemic way. And you can see it has now been raised at the level of Xi Jinping, who's aware of the issues, but they still really haven't figured out the answer.
And what about private investment? How are these security issues actually beginning to stymie private investment by Chinese companies and vice versa, investment by foreign companies in China?
Well, I don't think the West has really come to grips with this. You know, if Chung Kong Holdings, Li Ka-shing had made an independent bid, an identical bid for the identical asset, would it have been approved? Even I'm not sure which way that should go. Li Ka-shing is an example of an investor who has a very strong long-term relationship with China. There would be some concerns, but he's also an investment legend who's incredibly respected, you know, in his profession. I don't think the world has quite figured out what to do if China starts to do this from a less state-centric position.
Let's talk a bit about that relationship between CKI and the Chinese state. Here there was some reporting about, oh, well, you know, generally speaking, this is a Hong Kong company. They're kind of being tarred with the same brush, so to speak, of other Chinese state-owned companies. But as you said, Li Ka-shing has had a relationship
right.
over the years with the Chinese Communist Party and the state. How deep is that connection?
Extremely, I think. And it may not influence day-to-day or less important decisions, but when push comes to shove and Beijing finds something is a top-tier issue and they call Li Ka-shing and said, we need you to do this, for him to say no puts much more than that deal at risk. It puts, you know, parts of his entire global empire at risk. That's not something that he would refuse lightly. So there are some serious concerns, even with someone who's as experienced and professional as a Chung Kong is.
Yeah, and now where to now for CKI, do you think? Do you see further attempts to invest in Australian infrastructure, or do they back off for the time being, given the domestic environment here?
My guess is that China has been pushed back a bit here. They will probably accept that lesson and move to other markets in Southeast Asia that might be more receptive. And again, this is, I think, the main thrust of the Belt and Road effort as well. But I don't think that it would be smart to keep sort of beating your head against a rock trying to buy these sorts of assets in Australia or the U.S. or even Western Europe.
Mm. And to this broader issue of the trade war with the United States, as I said, President Xi addressed the Expo this week. There was some much more conciliatory language, almost an attempt at détente, some would argue. Where do you see this going, particularly in terms of the post-midterm elections in the United States?
Well, look, there was some verbal détente, but I don't think it meant very much. I'm actually a bit pessimistic, in part because of the Expo. From the American side, the root of the problem is technology. It's forced tech transfer, it's IP protection, it's the subsidizing of state-owned actors. And when Beijing puts on the Expo, it's basically saying we can help solve this problem by proving that we can be bigger, better importers. Well, import levels aren't really the issue. And what the Expo says to me is that Beijing and Washington may be viewing this in diametrically different ways. And that makes me think that the G20 meeting coming up in Argentina may not produce much of an agreement. And then I think the markets will react rather poorly. As for the elections, I think that China's hopes that Trump would be rebuked, I think it didn't turn out that way. I think Trump did reasonably well. But I also think that it will be more difficult for Trump to make strong concessions to China now, because if he were to do so, he would be immediately pilloried by a Democratic House. So I think China should be disappointed in how the elections have turned out.
Yes, and on one Chinese company in particular, I just wanted to ask you about H&A. I know you cover them quite carefully.
Sure.
They obviously had I
follow them closely.
Surprising death of the co-chairman. They've been retreating from investments, including in Australia. They have this investment in Virgin Australia, the second airline. How long do you think they could hold on to that investment? And what about their other global assets? How much pressure are they under?
I think, well, they're under tremendous pressure, and I think they're selling things as quickly as they reasonably can. I think they would sell out of their Virgin position as soon as they could get a deal that was reasonably acceptable. And the fact that they haven't yet done so says to me that it's just been complicated for them to get a deal that they can buy into. But when they can sell, I think they will. That is simply no longer a core asset for them. And I think they'd rather have the cash.
All right, well, Brock Silvers from KU1 Capital, thank you so much for joining us from Shanghai.
Thanks for having me.
All right, after the break, Steve Vamos, Xero CEO, on the company's first half earnings.
Now, back to Ticky.
Welcome back. Well, in news to hand, New South Wales opposition leader and Labor leader Luke Foley has resigned in the wake of sexual harassment allegations that were brought by an ABC journalist. So that's just to hand. Now, Xero's first half revenue has soared by almost 40% to more than 250 million New Zealand dollars in the first half of 2019, with the software company locking in almost 200,000 new subscribers during the half year, taking their total to more than 1.5 million. Leanne Jones spoke to Steve Vamos earlier today.
Sort of point to a few things. Firstly, we continue to grow. We continue to grow very strongly on the revenue side, and also very pleasingly with annualised monthly recurring revenues, which is taking the last month of the period and multiplying by 12. That number is $589 million, which is up 40% year on year, which is a great indicator that the subscriber base and the revenue we have is going to grow strongly in the, looking forward. Operating discipline, it's really important. The operating cash flows improved $20 million to $36 million. And in terms of the net loss, you have to take into account a couple of things that we announced during the half. We announced the move from building our own payroll solution in the US to a partnership with Gusto. And that led to a $16 million impairment. So in other words, we stopped building that software and we impaired that asset, and that's come off that number. The second thing we did was we also had some costs associated with the acquisition of HubDoc. The point about those things is both of them actually position us better for the longer term. So the money that we would have spent building US payroll is now going to be deployed on investments that are going to give us a better return. And the other benefit is that in the US, our offering is better now because the payroll offering with Gusto appeals to a much broader audience of US customers than the previous solution that we were building.
Look, I do want to talk about your US presence and your global sort of footprint more broadly in just a moment, but just on some of those metrics, obviously subscriber numbers are growing. Yes. Revenues are rising, as you mentioned there, and quite strongly. Cash flow looks to be very healthy, so everything looks to be very good despite the widening of that loss. As you mentioned, you've obviously explained that. Do you intend to see a maiden profit anytime soon? Look,
we've given an indication that we will get to cash flow positive in a reasonably near term. We don't really make comments much beyond that about future, but we have indicated that given we are such a high growth company and given that the opportunity for us is so large around the world, as we start to generate positive cash flows, we're inclined to invest those monies back in the business, assuming that they meet acceptable investment criteria.
Sure. I feel like it was not that long ago that we were actually talking about you reaching that 1 million milestone with respect to subscriber growth. You've now topped the 1.5 million subscribers. I think it was another 14% growth that you'd seen in the first half. So very significant. What is the next milestone that you're targeting, and is this kind of growth sustainable?
Well, it's interesting because when we look at milestones, we look longer term, and we really look at the things that are really important to us to become the business that we can be in the future. And you look at the potential for globally for cloud accounting. The penetration rates are still, in most countries, under 20%. So there's an opportunity for us there to keep doing what we're doing and do it well. The second is that as we've evolved, people have really come to realise that Xero is more than cloud accounting. We are a platform for small business to do business with accountants, bookkeepers, their banks, and so we're extending Xero very much into new revenue streams, transactions, and other connections and relationships. So really looking longer term at the potential for us to grow and focusing our efforts around those two key themes is what we're focused on.
When you consider the overall accounting software sector and the cloud accounting sector in particular, MYOB, I suppose, is probably your major obvious competitor, probably in Australia and New Zealand. Are you increasing your market share against MYOB and your other competitors?
Look, it's really interesting when you look at markets. Australia and New Zealand penetration of cloud accounting is in the 40% in our estimation of what market looks like. And there are variations on the theme, but for us we predominantly look at the sweet spot of businesses that employ 1 to 100 people. And we look at that 40% plus penetration rates in Australia and New Zealand versus less than 20% in most other significant markets, says one thing. It says that Xero innovated, Xero disrupted, Xero has led this move. So we're the leader, and we continue to invest and continue to focus on making sure our customers are happy with what we're offering them and making sure we're enhancing our offering, and that's really the focus for us.
In October, you completed that, just speaking of investment, you completed that $300 million of convertible notes issue. Can we assume that you'll be using that to target further acquisitions and investments? Can you give us any sort of idea on what some of those might look like?
Yeah, we specifically said that the capital we raised is for the purposes of acquisitions and investments. And there's a really good example of one that we did during the half, which is HubDoc. And HubDoc's a Canadian company that really met our investment criteria because, first of all, their offering enhances cloud accounting, makes it easier for accountants and bookkeepers to get through the paperwork and spend more time helping business. It also helps us with this extension of Xero into a platform because HubDoc has expertise and technology that takes data from a whole range of different sources and automatically puts it into, in a sense, your accounting workflows. So that really helps us in becoming this small business platform. And then HubDoc's also in a market that's very attractive to us, based in Toronto. Canada is a great market for us. It's one we're investing in. So they ticked all the boxes, and that's the sort of thing that we'll be looking for.
Earlier in the conversation, you mentioned there obviously your target or your next milestone being to be, cash flow break even. Will you need to raise more capital to reach that cash flow break even point?
No, we're very confident of that.
Okay, all right. In terms of your penetration around the world, and you mentioned HubDoc, you mentioned Canada, the Americas, the UK. How is your global footprint looking versus, your Australia and New Zealand presence?
Yeah, well, look, our global footprint is growing. I mean, the results really underscore that. The UK, a real highlight for us, 46% revenue growth, half to half, which is terrific. We're seeing really good growth in the rest of the world, and also we're seeing some solid growth in Canada. And we're really pleased with the progress we're making in the US. A lot of work to do there. We reoriented our business model about 18 months ago to really align it with the playbook that has worked for us elsewhere. And so we're now really building our relationship with accountants and bookkeepers in the US market. The small businesses represented by our partners in the US now has increased by 70%. So the access to market for us is improving as time goes by. Our product fit is improving. So we're very optimistic about growth in the international markets.
What is the competitive nature of the US market versus what we see here in Australia?
Look, it depends how you want to look at it. Because my experience in the technology industry, in the many different sort of waves of change I've experienced, is that when you're talking about a new market, a growing market, competition actually can be a friend. Because what you're trying to do is shift the way people think about how they do their work. So whether it's the US, the UK, Australia, New Zealand, you're really talking to accountants and bookkeepers and small businesses about doing things differently. So for us, we see so much opportunity out there. Our focus really is more on making sure we're meeting the needs of our customers, more so than what our competitors are doing.
Steve, earlier in the year you delisted from the New Zealand Stock Exchange to focus solely on your listing here on the ASX. How would you describe the move to delist from New Zealand to have your ASX only listing? Has it been a success for you?
Yeah, well, look, the parameters and the thinking behind that move have all really been shown to have been good ones for Xero, because we got included in the ASX 100, and we also were able to go about the capital raise through convertible notes. So, those things indicate that the thinking behind the move was really well justified.
I do want to ask you, and this is kind of a little bit off, your business and what we're talking about, but just brings in the competitive nature, and I guess just bringing up MYOB as well, one of your major competitors. It is the subject of a potential takeover bid at the moment from a private equity firm, with the potential for that to be at play for private equity there, perhaps even a delisting. Yes, there's a lot of unknowns. Fair point there. What would that potentially mean for you, though, going forward?
I think I'm going to disappoint you, because it's not sort of in the frame of, it's not in the frame of my thinking. My thinking is so much about what we have to do, how we can be better. There's great opportunity out there, and plans by other competitors have their plans, and we'll see how it plays out.
Yeah. And I guess, you stepping in, taking over from Rod Drury, at the beginning part of the year there, the strategic direction for you, do you intend to follow in, the same sort of footsteps that the business was going? How do you kind of plan to make your mark at leading the company?
Look, the exciting thing for me about Xero is that there's so many elements to it that are special. Be a global technology company born in New Zealand and strong in Australia, to have the purpose we have around helping small businesses grow, to be actually making a real contribution to evolving and helping the accounting and bookkeeping industry. There's so much great stuff there that for me it's a pleasure to be able to be involved in this journey. And for me, what I'm doing is really picking up from where Rod left off and making sure that the dreams and aspirations he had and we share are the ones we deliver on.
Well, that's all we've got time for this evening's show. Tomorrow, Boeing Defence's Australian Strategic Advisor and Victoria Cross recipient Mark Donaldson. Until then, thanks for your company.